Do you ever feel like you are just muddling through your bookkeeping tasks, wondering if you're really doing it right? In this video, I will highlight the 10 most common technical bookkeeping errors we see small businesses making. I'm Kristie Van Pay with Prosperity Bookkeeping, and we take the guesswork out of small business bookkeeping. I have cleaned up thousands of bookkeeping mistakes over the course of my career, and that is why I started this channel, to help you avoid making the same costly mistakes and to show you how to put the bookkeeping process to work in your small business. I don't want this video to get too long and overwhelming, so I will be following this video up with solutions to these errors every few weeks until we have covered them all. Some of the topics already have solutions or in-depth videos in our library, and I will have those linked in the description below and in the appropriate spots in the video. In the meantime, you can get more great tips and training guides by visiting our blog linked in the description below, and subscribe to our newsletter to be the first to know when new content is available. So before we even get into this topic, I do want to preface this content by saying that there is no shame if you are making any of these errors. Oftentimes, accounting software takes for granted that the people using their software understand accounting. Like I always say, QuickBooks doesn't make you an accountant any more than Word makes you a best-selling author. It's not the user's fault that they don't know what they don't know. So if you are making any of these mistakes, take it in stride, have a little grace with yourself or whoever is doing your bookkeeping. Okay, let's tackle these common mistakes so you can achieve better bookkeeping results. Error number 1 is not reconciling all bank and credit card accounts used exclusively for the business. The reconciliation process is the most important first step to ensuring that your financial statements are accurate and have integrity, so that they are believable and can be trusted sources of information. While commingling funds or using business accounts to make personal purchases or using personal funds to make business purchases is not a technical error, it does make the reconciliation process more difficult and less effective than it should be, not to mention the additional liability it creates for the business owner by reducing transparency and potentially piercing the corporate veil. Piercing the corporate veil is when your personal assets are put at risk because a court of law deems that you did not treat yourself and your business as separate entities. My rule of thumb is if you wouldn't let your employees make the purchase out of your business account for their own personal use, then you shouldn't either. I have included a link to this video in the description below, and I'll also try to remember to link it up here so that you can see more on this particular topic. Error number 2 is directly related to QuickBooks Online, or QuickBooks I should say, and that is that the Undeposited Funds account has items in it that are really old or income has been double counted because the Undeposited Funds account has been used incorrectly. Error number 3. There are unapplied payments or credits in the accounts receivable or accounts payable accounts. I have included a link to give you more specific information on this particular topic in the description below. Error number 4. Loan and mortgage payments are entered as expenses with no associated asset. Also, sometimes the line of credit balance is entered as a liability for the amount available rather than the amount actually borrowed, or it gets set up as a bank account. I've included a link to this particular error with more details in the description below. Error number 5. The payroll liability accounts don't match the current amount due. This can happen for several reasons. Maybe some payments were recorded as expenses or coded to the wrong account rather than through the liability module. There might have been a change in the payroll processing service, which creates a change in how things are done, and this can sometimes lead to errors in this particular area. I will say, this is one of those errors that even stumps even the best professionals. I've had errors before in the payroll liability account that are almost impossible to clean up without creating some very creative workarounds for them. And even if you search how to clean up any liability account that uses a specific module in QuickBooks, you're going to be hard-pressed to find a really good answer, especially in QuickBooks Online. It was easier in the desktop version because they had a place to make an adjustment that wouldn't affect both the module and the balance sheet, but in QuickBooks Online, that is not the case. And so any change that you make affects both places. And if they're already not matching, then it's really hard to get those two to sync up. This is something that's really going to be left to a professional who really understands QuickBooks and isn't afraid to create these little workarounds. So I don't necessarily know if I'm going to have a solution for you here. I'm going to try my best. I do have a solution I use, but I'm not sure how easy it's going to be for anyone to understand. So I will be posting that in the coming weeks. Error number 6, the sales tax liability doesn't match the current amount due. This one is very similar to error number 5, and it can happen for the same reasons. Perhaps an expense or a payment was recorded as an expense rather than an entry in the liability module, or maybe there were changes made to a sales receipt or an invoice in a closed period. And if that's the case, again, it's kind of the same issue. Trying to get those back up to matching, getting them to the correct account can be a real challenge. Even the best professionals out there don't have a good answer for that problem. And if there's any professionals watching this and you do have a solution for this and it's posted somewhere out there, by all means, please share it with me in the comments, and I will definitely be happy to share that in my network of people as well and among my followers. But there really just isn't a good solution for it. I've even called QuickBooks support and they really can't help with it either. So what I'm saying is it's not impossible to fix, but the more that we can do to try to avoid it happening in the first place, the better off everyone is going to be. So again, I will do my best to put a solution out there in the coming weeks. I do have a workaround that I use, not sure how understandable it will be, but I will definitely try to make it a little bit more understandable and try to get it out there for my users. Error number 7, I see this a lot. The credit cards are entered as one lump sum expense from the statement. That isn't technically wrong, but it is very clumsy. So I have linked a video in the description below with more on that particular topic and a solution for you. Error number 8 is that the chart of accounts is too specific or too long. So sometimes people might use vendor names in their chart of accounts, or they might be using classes or locations to try to track expenses for different areas of their business. And while that isn't necessarily wrong, there is a better way to do that. And that is just something, I kind of use a rule of thumb that with the chart of accounts, we want to keep it as simplified as we can. And I know this depends on the size of the business, and it also depends if you're a private company or a publicly traded company. In those cases, you have to be very, very detailed. But for the average small business, the more simplified you can keep it, the more digestible those financial statements will be. And so I will be linking a video in the coming weeks and probably even a blog post on how your chart of accounts should look. And if you do have different areas of your business that you're trying to track, or you're having different profit centers that you want to be able to see specifically, there are ways in accounting software that you can do that without having a really lengthy and complicated chart of accounts. Error number 9 is something that I see a lot, and that is coding vendor credits or refunds to an income account rather than classifying them to the expense account that they were originally classified to in the first place. So an example of this would be, say you went to Walmart and you bought office supplies, so you're going to classify that expense to the office supplies account, but then you need to return something, like maybe you got the wrong ink cartridge or whatever the case may be, so you bring it back to Walmart, and when you come back to the office, you record that refund to your checking account as income, as an income account for like refunds or something like that. And while that works, I mean, it ends up all in the same place in the bottom line at the bottom of your financial statements. The reality is it should really go back to that expense account, because all you're doing is just reducing the amount of that expense, because you, after all, ended up not purchasing that particular item, so therefore it shouldn't be included in your expense. Finally, we've made it to error number 10, and this one has accountants all over the world going like this at various times of the year. And that is making changes to your financial statements in a period that has already been closed. And what I mean by closed is that there's basically, and this is a very loose definition of closed, but it means there's already been some sort of a return filed on that period. The numbers have been finalized, it has been reported to a government agency, and those are the stated numbers. And then somebody goes and makes a change to those numbers. And the reason this can be frustrating is I'm just going to use this as an example, and I don't prepare taxes, so if you're a tax preparer out there and I'm saying something in error, please, by all means, in the comments, correct me. But what I've learned over the years of working with tax preparers is that when they go to start your tax return for this year, they're going to look at their numbers from last year, and they're going to compare that to your starting numbers that you've given them for this year to make sure that they're starting at the same point they left off and that no changes have been made. And so many times, changes have been made. And then they have to figure out what changes were made to try to get everything back into matching so that they don't have to amend the return or refile the return. This can also be very frustrating to the business owner. And one of the reasons that it can be frustrating for the business owner is because if you're an organization who files sales tax returns, for instance, and then you go and make a change to an invoice or a sales receipt that is in a period that has already had that sales tax return filed, you now have to amend that sales tax return, because you'll now notice, especially if you're using QuickBooks, that in your sales tax module, it's going to show that you have a credit coming back to you or that you owe additional tax more than what you originally paid in. And so now you have to take care of cleaning that up and getting that off your books, and it's because a change was made to a period that it really shouldn't have been made. So if you have, and I'm just going to give you a quick little tip on this one right away, because this frustrates so many accountants, is if you have to make a change to an invoice or a sales receipt in a period that has already been kind of reviewed and closed out, then you need to make that change in the current period. Don't change the original invoice. You need to create a new invoice if you need to charge them extra in the current period that you're in. Or if you need to refund them, then you need to do a credit memo or a refund receipt for that particular sale in the current period so that it's not messing up those numbers from prior returns that you've already reported on. I have given you the 10 most common technical bookkeeping errors we see, including links to some videos that go more in depth in the description below. But if you want to learn more, visit our blog linked in the description and subscribe to our newsletter to be the first to know when new content is available. If you found this video helpful, please don't forget to give it a thumbs up. And if you haven't already done so, subscribe to the channel. Comment below, which error would you like to see a solution for first? Thanks for watching, and see you next time.